Just lovely. Absolutely lovely. We have a lot to talk about here, people. Where to start? All right, here. So this is my post-market wrap-up on this. Did I forget to say lovely? It's a lovely day. Tuesday, August 19th, 2020. So, what happened today? Stocks finished lower. I mean, I'm talking about nothing dramatic at all. But yeah, stocks can drop. We're talking about, again, fractional losses for the Dow, the NASDAQ, S&P 500, for which earlier in the day, the S&P 500 hit a new intraday record high. Look, number one, and there's going to be a few numbers here. This market has gotten stupid. And I would love to see it pull back a little bit here. I added to all my positions today. I traded in and out of one today. And if need be, I will add to these positions again, all on the long side of this market. Now, why would Greg be saying that? Well, maybe because we heard from the Federal Reserve today. Yeah, the Federal Reserve minutes, very bad. Very, very bad. Basically spelling out that our economy is in shambles. It's falling apart, and they're downgrading their economic forecast moving forward. Imagine my surprise. Shock. Look, duh. I mean, we're in an economic deep freeze, an engineered one. This is deliberate. You all know that. So could you imagine that one person walking around thinks that we're booming and we're prosperous and we're doing great? Well, maybe some people would, because again, the stock market just hit new record highs yesterday with regard to the S&P 500 and the lovely NASDAQ. But no. So why is Greggy here all giddy? I'm going to tell you why Greggy is giddy. Hey, that kind of goes together. Well, now that we understand, finally, that the economy here, well, can I say sucks? Yeah, it frankly sucks because of the engineered meltdown. This is engineered by design. A culling is taking place, and people are just walking through time and space wearing their lovely New World Order device, thinking, oh, I'm helping myself and others. I'm helping myself and others. Duh, and freaking duh. You can't make this stuff up, but this is what's happening here. It's a culling. Now, being that the Fed is making it plain, or has made it very clear, that our economy is terrible, they're downgrading their forecast moving forward. Let me give you one guess, only one, as to what the Fed is going to be doing here. Ding, 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 ding. A bell's going off in your head. Ding, dong, ding, dong. Yeah, they should be going off in your head, because the Federal Reserve is going to now open wider the floodgates of debt. Yes, that's exactly what they're going to do. They're going to buy more debt. They're going to buy it all, just like they've been doing, but they're going to kick it up higher. So what does this mean? If we know for a fact, before today, that the Fed is going to inflate, World Bank, today, the World Bank said the global economy is pretty much melting down, and there are very desperate countries out there that they're buried in debt. But we, the World Bank and the IMF, we are more than willing to issue loans to them. Of course, these loans will be in US dollars. Do you see how it works? This is how it works. But they think you're stupid. But you see, you got me to explain to you how the twisted system really carries on. So understanding that World Bank, more debt, IMF, more debt, Federal Reserve is going to open up those floodgates even further. Where do you think the stock market's going to go? You don't need to have a PhD in rocket scientist as a rocket scientist to figure this stuff out. All right, so let's talk about a few other lovely things here. Cryptocurrencies fell under pressure today, as well as gold and silver. To me, To me, understanding the environment we are in, well, I mean, the environment we are in dictates to us, those of us that have a few firing brain cells left, that we should be, again, doing what? Betting against the debt, becoming your own central bank, which includes holding a cryptocurrency or cryptocurrencies. It's my opinion. You can have yours. How's that? But this is what the Fed is talking about today about the economy and downgrading our economic forecast is bullish for the stock market, which is again priced in dollars. Speaking of dollars, the dollar got bid up today. In fact, it made an incredible turnaround today. And ironically, I posted links to this all over the place. Wall Street hedge funds are now short the dollar for the first time in 2 years, and the dollar makes a miraculous bounce. I posted earlier underneath this, when we found out about these hedge funds, I said this to me is short-term bullish for the dollar. Because you know why? Because the hedge funds are always wrong. They're always wrong. Why do you think you hear about this hedge fund closing, this hedge fund closing? We just found out about a hedge fund yesterday that lost $21 billion. How any fund can lose money in this environment, I mean, they should go away. They should just be gone. It's impossible to lose money here. Infreaking possible. Now, of course, like I always say, as a trader, you will have losses from time to time. It's a guaranteed fact. You can't escape it. But in aggregate, you should be ripping the face off of this market here. And you know why? What's the mechanism here? More debt. What do we hear from the Fed today? Downgrading U.S. economic forecast, because we're not booming. This is not a booming economy, believe it or not. No. And so seriously, you know what you should be doing here could not possibly be more simple. Look, that's it. And what you can expect here, people, look, sadly, and someone said this earlier, and I wish I would have remembered this person's name. The middle class, at least whatever is left of it, no matter what happens, no matter who sits in the Oval Office, no matter what, always gets stuck with the bill. Today, the middle class is nearly extinct. I mean, as I have explained to you for almost a decade, moving towards that two-tier society, extreme haves, extreme have-nots, well, we're here now. If you remain in this gap, right, between these two things here, you are an endangered species. And I cannot stress that to you enough. You are an endangered species. Now, let me say this too. Of course, you should be talking to your fund manager about this, but I'm gonna just throw it out here. Yes, the stock market has gotten so far ahead of itself, it's not funny. I wrote an article for the Trends Journal. It just came out yesterday, talking about, again, the bubble, the irrational exuberance, the fear of missing out, what's happening here in this market. You know what? If I were a member of the middle class, okay, and I had a nice fat profit in my account, whatever it might be, a 401k or something, I would find a way to get it out, just so you don't fall into that lower rung. Because let me explain this to you. Although the action of world central banks who are taking over the world via their mechanism of issuance of debt, there's going to be a moment, and no one is smart enough to know when this is going to be. Okay, not me, not nobody. When the irrational exuberance, the fear of missing out is just going to stop. I still think we have a way to go because as I have covered for a while now, as long as the Fed inflates their balance sheet, and after today, they're going to inflate faster, the market will rise. But again, if you're a member of the middle class, you're an endangered species and you need to help yourself. So you should think about ways that you could, make sure you don't plummet down to that lower rung of society. Because again, whatever exists on your digital screen with regard to, profits you've made in your 401k plans or whatever, We had the same thing happen in 2008, and people got evaporated. Their accounts got evaporated. That's going to happen again, although to a much, much greater degree. Because if you look at the stock market today, and you look at the stock market prior to the last meltdown, there's no comparison. We have literally today gone where no man or woman has gone before. That's the truth. So the inevitable meltdown here is going to be that much greater. And it's going to catch you by surprise. I don't care how smart you think you are. I don't care how smart you think your fund manager might be. You're going to lose. 99% of you are going to lose. And it's always the same story. Everyone thinks they're smart enough to get out. But what happens is they're not. And everyone runs for the door at the same time. The people out the door first, be first, be smarter or cheat. Well, if you're first, that's obviously the best avenue here. You will do the best, and that will, of course, be the smart money, the Wall Street banks, the extremely wealthy people like myself. I'm not afraid to say that. Although I don't have a single core position, not one. Not one core position. I told all of you when I closed my core positions, which were all large cap, high dividend paying stocks. I used to at least like to have that stuff laying around. But since I closed that position the Friday before the market melted down, best call I ever made in my life. Subsequently now, I'm just trading this market with all that cash. And I have done so much better than I think I possibly could had I held on to all that stuff and got the dividend payment. I mean, it's just stupid. But again, when everyone goes running for the door at the same time, the people who do not sell first get crushed. They get crushed on a stampede towards that door. And in a panic scenario, which will happen, people are going to be willing to take anything for whatever stocks they have left. And if some people are, let's say, trading, and they're trading on a margin, they're going to owe more than their initial investment. People are going to get devastated. Absolutely devastated at one particular time. When that is, I promise to do my best to keep you on top of that. But for now, the game is still on. Again, we just exited a bear market yesterday, and now we're in a new bull market. Is it any surprise that today we had a pullback in the market? Would it be another surprise if the stock market fell tomorrow or even the next day? Would you be shocked? Would you be aghast? What would it do to you? No. You should expect these things. That's the game. That's the way it is here. And the market will continue higher. Especially, I'm more bullish today because of what the Fed said. Being that they are downgrading U.S. economic growth here, what do you mean? What does that mean for you? What does that mean for us? We're going to watch the Fed open the floodgates to finish their final solution, to buy it all. Period, the end. That's what they're doing. All right, look, kind of a long video, but I think I covered a lot of important things here. People, look, I cannot stress this to you. I'm going to say it again. If you do not, as of yet, subscribe to my newsletter, it's 100% free. There is a link in the description of this video. You are missing out on a very large scale. I mean, if you're not a trader, I got it. It's mostly for traders, but the information I put out there should allow you to delve a little deeper into the mechanism behind this stock market. And that should also give you an edge on how you should be playing it with regard to stacking metals, with regard to holding cryptocurrencies or anything else. Never, never, ever be a one-trick pony. Okay, you hear people yelling out, oh, this asset, oh, that asset. What about that? What about that asset or this asset? No. If you're in any one asset and that's your all, well, I think your cash is in the wrong place. You got to be somewhat diversified into several things. I still stand by what I've always said. I've always said that physical silver is the most undervalued asset in the history of the world since day one. But that is not the only asset that I hold. Anyway, I just want you to think about these things. It's important. All right, with that said, You know, this guy here loves all of you a lot. I mean that. And I'll see you in the morning. We're going to have just a grand old day. I promise you.